Midday update, S&P 500. We're just going to keep it brief. We're going to keep it short. It's doing everything that we talked about off of this last bottom here that we talked about last Saturday and Sunday. When we took it from here off of the double bottom, we never got past our 12.25, and we sold it short. And we got back down here to the low again, 11.36, and we did not break below these half bars, so we had to go long. We've had 1, 2, 3. We're on the fourth good up day with this diamond. And basically this is 915 diamond right here. And we're right back up at these major tops. Now, when I look at this half bar, that's 1216.21 on the S&P for that half bar. This last half up bar was 1194. That's the current support level as being above this half bar. My point of it is the major hook is if we break above 1225, it'll be 1229. But SMF has clearly said that we could rally up here going into the October earnings. And the thing of it is, if we break above it, people are going to be out to sell here. They sold here yesterday. They sold a little bit today into it. And until we get up above this 204, that was our original where we had to go short when we had that big down. Right here, we popped up and we went down. This is all the multi-year bottoming process from the original selling up here at 1350. And the ranges would be that we come up, if we can break through the key levels to the upside, we get up here. If we could, then that means that the upper end would be 1248 on the S&P, and year-end low end is going to be 1020 on the S&P. And that we're going to remain in this level right here. But when we get into the earnings season, the S&P can do lots of different things, such as a number of companies missing or guiding down and lower growth and whatnot. And the thing about it is that this is an upside volatility. We've had plenty of them. We had number 1, we had number 2, and we're working on number 3. Within the lower bottoming process, holding my SMF half bar at 1142.63 at support sent us higher. There will be a lot of people who sell into this area, okay? And right now I can show you that the S&P is at 1203.92 there. Now let's pull up that daily chart. And here you are. You're right here at 1203.76, 1203.76, up 15.8 handles, working just fine. And the thing about it is, when we clear through that 1204, we are got a couple of little bars, MMTs, and we've done all of this work already. And this half bar right here, and those 1194 that it keeps pulling back to and wanting to bounce from, it's all going to be about this area right here. This is it. And we are about to break that 1204 where people have been selling into. And a consolidation above it will get us to the 1216, back up to the 1228, and a breakthrough there. Well, we've got other upsides. There's a 1247.88 right here. That's the high end of that reversal bar, this half bar. So we've been working the wall of worry and taking that upside volatility just as we did once, twice. This is our third volatility, but we had one volatility, two side volatility, meaning that we've got a 3-to-2 weighted ratio volatility to the upside and 2 reversal sides to 3 upsides right here. And basically the market is trying to work off, like I said a couple of weeks ago, if you take a look at all the analysis, you take a look at everything, no one is long down here. We are. We called the damn thing. It didn't break the half bars. Go back to last Saturday and Sunday, especially the analysis and why you'd have to be long up and out of the money for volatility and get paid. And same thing with individual equities. And it's a multi-year bottoming process. And it's got a 3-to-2 head count to the positive versus the negative. The bottoms are in. These bottoms held here. The body's closed above it. The half bar here where the rally started up there. This one here isn't nearly as strong as this was. This had a little bit more volatility in its upside count now. However, the downside count here held. This downside count held these diamonds. Notice how it never went below my diamonds here? Never did close below them. Never got below those diamonds to put another run lower in the S&P because it didn't. And up here at the top, where we start getting into where the diamond reversal is, we're going to have to close above this diamond right there. And that's 1216 half bar right here. It tells you in the info panel. Calculates it all for you. But this is going to be the area that when the amount of sellers that are selling into here get out of the way, that's where you can see the remaining of the upside S&P. The S&P yearly analysis. The S&P year-end analysis. That's a good title.